It does seem like investors still buying the India story.
I think it's the most transformational story in the world today by a long margin. And again, if we go back a little bit, like 500 years, you would see India and China were more than 50% of the global economy. I think they're slowly coming back. We've seen some pause in the growth story of China, but what's happening in India is actually quite remarkable, and it's built on the stability, the demographics and the infrastructure, and then it's getting the tailwind of geopolitics. And when you think of stability, you have politics, policy, macroeconomics. It's transformational, and I do think if you continue to see that political and policy stability, this story has 20 more years, at least, if not longer.
But we're talking about stretch valuations, and some people say, you know what, relook, reassess. Perhaps it is time to buy China, take money out of India, put it into China because it's been battered, and you know what, we probably would have seen the bottom already.
So that's an interesting point, because that point would have been discussed last year, year before, or... So question is, at what point you're going to be right, and even a broken clock is right twice a day. So obviously there will be a point where this will happen. But if I again think about the investor flows, so portfolio investor flows versus the FDI, the way I would think of is the liquid market, so the public market flows will have that tactical view around India, China, and in fact Japan, and where you allocate. And we've seen some reallocation of that China to India and Japan in the last 18, 24 months. Some of that will go back. Private markets, probably more towards India. And then the FDI, for sure, away from China, more towards India, Vietnam, Mexico, Malaysia, Thailand, and a number of other Asian economies.
So what's the bet in India? What's the bet in China?
So the key in India is you want to go with the long duration assets for actually writing the macro story. The public markets are stretched, so it's very hard to build a very bull case for the Indian public equities, although you still have the benefit of compounding if the growth rate is where it is. In case of China, I do think people are underestimated the size or the growth of that economy, and hence the opportunities that exist in the public market. So I would tactically be long China here, but as I said, it's a little harder to take a much longer term view because of the policy certainty that you need.